In 1949, a man forgot his wallet at dinner. That's it. That's the whole mistake. A forgotten wallet. The kind of thing that happens to everyone at least once. Embarrassing for 5 minutes. Forgotten by morning. Except this time, that one forgotten wallet didn't just embarrass a man. It gave the most powerful banks on earth the blueprint they needed to extract $6 trillion from ordinary people. Legally. Permanently. With a smile. And the man who started it all? He died broke, young, and completely unaware of the monster he had created. This is the story of Frank McNamara. The most consequential man you've never heard of. And the trap he built that you are probably sitting inside right now. Imagine waking up in 1949. The war is over. America won. And winning feels extraordinary. Soldiers are home. Babies are being born at a rate that will define an entire generation. Suburbs are being built so fast that whole neighborhoods appear overnight like someone hit copy and paste on a blueprint. Green lawns. White fences. 2-car garages. The American dream isn't an aspiration anymore. It's a floor plan. Factories that once built tanks are now churning out washing machines, refrigerators, and cars with fins so large they look like they're about to lift off the highway. Consumer spending is exploding. Television is entering living rooms and telling Americans exactly what they should want next. And what Americans want, they buy. With cash. Always with cash. Credit exists, technically. Department stores have their own house accounts. Sears has a Sears card. Macy's has a Macy's card. But they only work at their own store. Want to buy a suit at one place and dinner at another on credit? 2 separate accounts. 2 separate applications. 2 separate bills. The system is fragmented, clunky, and deeply inconvenient. Cash is king. Cash is America. Cash is about to meet its greatest enemy. Frank McNamara was not a visionary. He wasn't building something in a garage. He was a credit manager at Hamilton Credit Corporation in Midtown Manhattan. Respectable job. Steady salary. The kind of man who wore the same watch for 20 years and called it reliability. Frank had a client. A businessman drowning in debt. Not because of bad investments or gambling. Because he'd been lending money to friends and family who never paid him back. Small amounts here. Large amounts there. And none of them returned it. Not out of malice. Just out of the quiet human tendency to forget debts that feel personal. Frank sat across from this man and thought, there has to be a better system. Some kind of universal proof of creditworthiness. Something a man could carry that told every merchant he walked into, this person is good for it. Trust him. He filed the thought away. Went back to work. Almost forgot about it entirely. Then came the dinner. November 1949. Frank McNamara took 2 business clients to Major's Cabin Grill. A Manhattan institution. White tablecloths so stiff they could stand on their own. Steaks the size of a man's forearm. The kind of restaurant where deals were made without paperwork because the handshake happened over the second bottle of wine. Frank was performing that night. Not selling a product. Selling himself. His reliability. His competence. Look at me. I am a man who handles money for a living. I am the kind of man you want on your side. The meal ends. The conversation is good. The waiter brings the check. Frank reaches into his jacket. Feels around. Checks the other pocket. The inside pocket. The trouser pocket. Nothing. He had left his wallet at home. Sit with that image for a moment. A credit manager. At an expensive restaurant. With 2 clients he is actively trying to impress. Cannot pay for dinner. The waiter is standing there. The clients are watching. The white tablecloth suddenly feel very, very bright. His wife had to drive to the restaurant and bring cash. Frank sat there and waited. 20 minutes. The clients made polite conversation. Frank smiled and nodded and died approximately 1,000 small deaths inside. But here is the thing about Frank McNamara. He didn't just feel humiliated and move on. He felt something sharpen. The engineer in him switched on. Because this was a solvable problem. I have money. I have credit. I have a salary any bank in the city would lend against. And yet this restaurant has no way of knowing any of that. All it knows is my empty hands. The entire system requires me to physically carry proof of my wealth at all times. That is insane. By the time his wife walked through the door with the cash, Frank had the outline of an idea. What if there was a card? One single card. Not tied to one store. Accepted everywhere. That told every merchant the same thing. This man is good for it. Send the bill later. Frank called his lawyer Ralph Schneider. Explained the concept. Schneider didn't laugh. He leaned forward. They shook hands. In 1950, Frank McNamara and Ralph Schneider launched the Diners Club card. The world's first charge card. The pitch was simple. Pay a $3 annual fee. Carry this card. Use it at participating restaurants. At the end of the month, we send you a bill. You pay it in full. No interest. No installments. Just convenience. The first card was not glamorous. It was cardboard. A small rectangle with 27 restaurant names printed on the back. Frank personally walked into each one and convinced them to accept his little cardboard rectangle as payment. Most said no. Some laughed. A handful said fine, let's try it. The first month, 200 cards were issued. Almost entirely to Frank's personal contacts. Total transactions less than $200. It should have died right there. But the cardholders loved it. Not because it saved money. Not because of rewards or cashback. They loved it because of something far more powerful. It made them feel important. Walking into a restaurant. Not fumbling with cash like everyone else. Producing a card. Signing your name. Walking out. There was a smoothness to it. A signal that said, I am the kind of person who has accounts. Who is known. Who doesn't need to carry money because money comes to me. Diners Club wasn't selling credit. It was selling identity. And post-war Americans, freshly wealthy and obsessed with what their possessions said about them, couldn't get enough. By the end of 1950, 10,000 members. By 1951, profitable. By 1952, the card worked at hotels, airlines, florists, car rentals. The cardboard became plastic. The network spread nationally. Business travelers discovered they could cross the entire country without once touching cash. Frank McNamara had accidentally built the thing the entire financial world had missed for centuries. A universal credit network. But Frank didn't stay to watch it grow. In 1952, just 2 years after launch, Frank sold his stake in Diners Club. Some say he thought the concept had reached its ceiling. Some say he needed cash. Some say he simply didn't understand what he had built. He walked away for a relatively modest sum. Ralph Schneider stayed. The company kept growing. American Express eventually acquired Diners Club for millions. Frank McNamara never saw that number. Frank McNamara died in 1957. Heart attack. He was 39 years old. He never saw credit cards go plastic nationwide. He never saw what came next. He built the door. He opened it just a crack. And then he left. And what walked through that door after him was something he never imagined and never intended. By the mid-1950s, every major financial institution in America was watching Diners Club with the focused attention of a predator studying something small and successful. American Express launched their own charge card in 1958. Green. Prestigious. Immediately iconic. Heavy in the hand. The kind of card that said something about you before you opened your mouth. But it was Bank of America that changed everything. Forever. In the worst possible way. Bank of America watched Diners Club. Watched American Express. Did the math. And decided that a charge card, where you paid the full balance every month, was thinking too small. Too honest. What if you didn't have to pay in full? What if you just paid a little? And we carried the rest? For a fee? In 1958, Bank of America launched the BankAmericard card in California. And with it, they introduced the concept that would quietly restructure the entire American economy. The revolving credit balance. Here is the math they don't explain when they hand you the card. You spend $1,000. Your minimum payment is $25. At 20% interest, that balance takes over 4 years to clear, paying only the minimum. By the time it's gone, you've paid nearly $600 in interest alone. You spent $1,600 for $1,000 worth of stuff. The bank made 60% more than the original transaction. By doing nothing except existing between you and the merchant. Bank of America understood this math completely. So they didn't just launch a credit card. They engineered an event. They mailed unsolicited BankAmericard cards to 60,000 residents of Fresno, California. No application. No credit check. No request from the recipient. Just an envelope. A card inside. And a message that said, here you go, it's already yours. They called it the Fresno drop. Cards were lost. Cards were stolen. Fraud exploded immediately. Bank of America lost millions in the first year. But the people who activated their cards and started spending? They didn't pay in full. The interest compounded. Month after month. And the bank collected. The fraud losses were nothing compared to the rivers of interest flowing in every single month from ordinary people who just needed a little more time to pay. The Fresno drop worked. Every other bank in America took notes. By the 1960s, the industry was expanding faster than anyone could contain. But there was a new problem. A merchant in Chicago wasn't going to accept a card from a bank in California. The system was fragmenting. The same problem Frank had originally solved, now reappearing at industrial scale. So the banks did something they almost never do. They cooperated. In 1966, a group of banks formed a collective network. Any member bank could issue the card. Any merchant could accept it. One system. Nationwide. They called it the Interbank Card Association. You know it today as MasterCard. Bank of America licensed their BankAmericard network to banks across the country. That network eventually reorganized and rebranded into something cleaner and more powerful. They called it Visa. Two networks. Built on the foundation of Frank McNamara's forgotten wallet. Between them, they now process over $30 trillion in transactions every single year. Every swipe. Every tap. Every online checkout. Every subscription renewal you forgot about. They are the invisible infrastructure underneath the entire global economy. And they charge you for every single transaction. The merchant pays a fee. You pay interest if you carry a balance. Everyone pays. Always. Forever. In 1978, the Supreme Court ruled that a bank could charge whatever interest rate was legal in its home state, regardless of where the customer lived. Banks immediately relocated their credit card operations to states with no interest rate caps. Delaware. South Dakota. Nevada. The interest rate ceiling disappeared overnight. Rates that were capped at 12 or 15% began climbing. To 20. To 25. To 30. They kept climbing. They have not stopped. The average American credit card interest rate today is above 22%. The highest ever recorded in American history. At 22%, a $5,000 balance paid only at the minimum monthly rate will take over 15 years to clear. The borrower will pay more in interest than they originally spent. 15 years paying for something bought in an afternoon. Today the average American carries 4 credit cards. Not 1. 4. The average American household carries over $8,000 in credit card debt. Total American credit card debt crossed $1 trillion for the first time in 2023. $1 trillion. Owed by regular people paying for groceries, car repairs, emergencies, birthdays, and the slow invisible accumulation of a life that costs slightly more than it pays. Credit card companies made over $160 billion in interest and fees last year alone. From people who just needed a little more time. The banks did not invent a financial product. They invented a subscription to debt. So elegantly designed that the people inside it often don't realize they're inside it at all. Because the minimum payment always feels manageable. Because the balance rolls over so smoothly. Because the tap is effortless and the statement doesn't arrive until next month and next month feels very far away. Frank McNamara sat in a Manhattan steakhouse in 1949. Embarrassed. Walletless. Waiting for his wife to arrive with cash. He wanted to solve one small and deeply human problem. He wanted to make sure a man could eat dinner without carrying the right piece of paper. He solved that problem. And in solving it, he handed the most powerful financial institutions on earth the perfect instrument to do what they had always wanted to do. Get between you and your money. And charge you rent every single time you reached for it. Frank McNamara died at 39. He never saw the trillion. He never saw 22%. He never saw 60,000 people in Fresno open envelopes they never asked for and activate cards that would follow their families for generations. He just forgot his wallet. That's all he did. The wallet Frank forgot that night cost him nothing. It cost you everything. And the worst part? You're still paying for his dinner.